Hey everyone, Karli Spahr here with Cross Country Mortgage and the Spahr Team, and I want to talk today about condos and what is going on with insurance requirements and so forth. So we are seeing an increasing number of condos with master policy insurance requirement issues that are causing challenges on conventional financing. So this isn't just government problems or anything the HOAs are doing wrong. What's forcing this to happen is rising insurance claims and prices. So HOAs are forced with either raising the deductibles or therefore, if they keep the deductibles lower, it's going to raise the premiums, which in turn is going to raise HOA dues. So it's a really tough situation for a lot of these homeowners associations. So what I want to tell you is the requirement from Fannie and Freddie, so that's Fannie Mae and Freddie Mac, conventional programs, is that the deductible for all perils, so this would be wind and hail, water, any other perils, fire, anything else, cannot exceed 5% of the face value. Okay, so let me give you an example. Today, the last couple of days, have been dealing with a policy where the face value is right around 42 million, we'll say, and there are close to 100 units in that property. So just doing some quick math, we needed the deductibles to be at $22,000 per unit. These deductibles are actually at $50,000 per unit. So what would happen is if there is a catastrophe, each and every unit is going to be assessed $50,000 to meet the deductible of the whole entire thing. So let's just say there's 100 units, to make math easy, times 50,000. That is going to be an extremely high deductible for the whole entire association. That's if I'm doing the math, $5 million, right? So they have to get this from everybody. And of course, the loss may not be that high. Maybe it is that high. Maybe it's a total loss in a fire. So they have to collect these premiums or these assessments from each of the condo unit owners. Now, the condo unit owners can have what's called an HO6 policy, what we usually term it as walls-in policy. Not every condo association requires you to have that. However, if you don't have it, you could potentially be leaving a large gap in coverage. So if you, for example, as a homeowner, get an HO6, you can get $50,000 in dwelling coverage and loss assessment coverage. So it covers that $50,000 gap. So if you are assessed that, it's going to take care of that for you. Okay. Now, the questions I've been getting faced with the last several days have been, why can't my HO6 just cover that loss assessment? Why can't Fannie Mae be fine with it, even though I'm over the 5%? Well, I'll tell you why. Imagine all of the unit owners have not got that HO6 policy with that loss assessment coverage, and it exceeds the damage, it's a total loss. They have to go collect this money from all these unit owners before everything kicks in. And if these other unit owners have not obtained that coverage, say you're one of 100 units and the other 99 haven't done that yet, because we have renewals happening on this policy and these deductibles are continuing to go up. And if current homeowners haven't paid attention to that, they could have these large gaps in coverage. Okay. So I don't know about you, but most people can't pull $50,000 out of their rear end when they're asked for it, especially if they've had a total loss in their property. Okay. So the HOA is forced with trying to pull this money out of their funds. And there's very few HOAs that have that much in reserves. So that is why Fannie and Freddie have been going back to these associations and saying, okay, if you're not going to lower your deductible to 5% of all perils, we can't do conventional financing. So I'm sorry, folks, as of right now, unless the deductibles for the master policy are 5% or less, you can't do conventional financing. Now, we have some other alternative financing options available. I'm always happy to help with that. They are competitive rates, so don't worry about that. It's just not always the most desirable loan that people are looking for. So if you have any questions, let me know. Agents, I strongly encourage you to go get that master insurance policy when you're taking a listing. Make sure you know what you can offer for financing, because they may not be able to get the normal conventional financing, may not be able to get FHA, whatever the case may be. I can help you structure that or go back to the HOA if we need to have conversations. But rest assured, Fannie and Freddie and the HFA are working on trying to come to terms with this, and they know this is a rising challenge nationwide. It's not just Minnesota or Wisconsin or Florida. I mean, it's nationwide. So they're looking to address this, but they're thinking, third quarter or later. So my experience with anything government related, it's going to be later. So be prepared. If the HOA is over 5% of the deductible for perils, the master policy, there are going to be some challenges, and I'm more than happy to help navigate those waters. Give me a call.